What's up everyone? Welcome to the first video on my channel where I'm going to be showing the strike and rescue system in full detail. So just to get straight into it, this is a fully automated trading portfolio. When I say portfolio, I mean it's 5 strategies working together in unison. 5 for now. I do want to increase it in the future, but 5 is just, a nice round number. 20% allocation each system, all working together at once. So let me break down how it works. We're verified on MyFX book and FX Blue. These 5 systems, as you can see here, we've made like mascots for them. We've chose different animals to represent the hedge and then Eudoxus at the top. The names, yeah, they are a little bit quirky. They're kind of derived from the pair that they're going to be trading. So Eugene is Euro GBP, Echo is Euro Swiss, the Swiss franc being CHF. Uncle is US dollar Swiss, Abracadabra is Aussie dollar CAD, and Eudoxus is Euro USD. So that's why the names are a little bit quirky. We've chose, underground, land, sea, air, space to kind of represent the hedge that they provide. We've got 6.5 years of backtest data, which I'm going to show you after this. Each of them, the way that they trade, and this is why we chose the name Strike and Rescue, is because they start off as an initial trade, one position with a take profit and a stop loss. If the market enters and the TP is hit, that would be the strike. Now, instead of a typical stop loss being hit, what this strategy will do, because it's an algorithm, is it will average into the position, which I'll show you here, which is the rescue aspect. So that's where strike and rescue comes from. We don't use any martingale in this approach, and we don't use any lot size multipliers in this approach. We do use grid trading, but the way that we use it is with a fixed lot size and a maximum amount of layers, which is super important if you want to trade grid method responsibly and carefully and sustainably. After a maximum amount of grid layers have been reached, which is different for each of these systems, then a stop loss gets applied as a circuit breaker. So that's the most safest, responsible way that you can use grid trading on personal accounts to use the benefits of grid trading and eliminate all the bad aspects of it as well. So the 5 systems here, you can see Echo, Eugene, Abracadabra, Uncle, Eudoxus. We have 6.5 years of backtest data on these, which is pulled directly from MetaTrader 5 with a 100% history quality. If you don't know what that means, it's basically where if you've got an algorithm on MetaTrader 5, you can simulate what would have happened on all of the previous data that's available on the broker feed. We've done this all the way back to the 1st of January 2020, and we've got the results displayed here publicly so that you can see. So here's the equity curve for Euro Swiss. You can see these drops is where the circuit breaker was applied. So it's not like an endless grid which will blow the account if the move goes too far away from us. It will stop out. The stop losses which are hit from these systems are around about 30%. Why I say around about is because it's not a hard stop on there which says if it reaches 30% it will close. The spacing of the grids and all of the take profit targets and stop loss targets are measured with volatility in mind. So if the market is moving extra volatile, the spaces will widen and the take profits and the stop losses will consider the volatility in the market. Likewise, if the volatility is lower and there's less rapid movement in the markets, they will widen to the targets will widen to target bigger moves, and the spacing will also shrink because there's less volatility, so it can be more aggressive in those aspects. And that is measuring the volatility in the market. So it doesn't use fixed pips, doesn't use fixed targets. It's a dynamic approach to trading which compensates for volume in the markets. Why that is appropriate is because if you have a huge volatile move and you're measuring things in fixed levels, that's not going to work. That's typically what will blow the account, because if you have a huge spike in price with the way that we're trading here, it won't trade that aggressively. It will ease off the pedal and it will trade it slower and wider, knowing that there's more volatility in the market. So that's why I say around about 30% for these circuit breakers. Now, because there's 5 systems with a 20% allocation each, that 30% hard stop, you could call it, on each pair acts as 6% hard stop per pair. So it's a very well diversified, very smart approach to trading, hands off. Now, before I show you and break down these results here, I just want to explain the context behind them in terms of what risk we've used on these specific backtests to present. Because our main audience for these systems will be retail clients, we typically find that people are happy to kind of really push them to the limit. So we have 6.5 years of backtested data here to show you, and the results that are displayed here are like the maximum risk that would have still not blown the account in this instance. So this gives you like an upper boundary, is the way that I'd like to phrase it. You can trade these with higher risk if you want an approach where you're going aggressive, you're trying to double the account and then pull the money out as fast as you can. That is definitely possible. And you can see from these absolute long streaks of clean runs that is more than possible with this. And you can also gear it down if you want a level that's lower risk with a larger balance, say, for a set and forget approach where you don't have to worry about any large periods of drawdown. So in this instance on Echo, we've used $250 trading 0.01 fixed lots. That achieved a total net profit of $700, which is 278.55% gain. That did have a max drawdown of about 75%. Like I said, you don't have to trade that high risk. This is just like an upper boundary, which most retail traders will be happy with. The win rate's 75%, and you can see all these other stats here. So that's Echo. Next up, we've got Abracadabra. This trades Aussie CAD. Same thing, 6.5 years data, maximum amount of layers on a grid, fixed lot sizes, no martingale, no multipliers. This one hit the circuit breaker quite a lot more, but it also traded a lot more high volume and generated some very significant gains as well. So likewise, this one was suitable with $250 using 0.01 lots. This one's got a history quality of 99%. This one had 100%. So yeah, this one's 99% history quality, which basically means like the moving ticks, it doesn't really accurately reflect, but we don't consider ticks in this strategy. Everything is based on closed candles and stuff like that. So 0.01s on $250 generated $838 profit with a max drawdown of about 60%. So this was 335% gain, 60% drawdown when using 0.01s with $250, 77% win rate. Eugene, which is Euro GBP, this one didn't hit any circuit breakers at all. For context, Aussie CAD and Euro Swiss trade a little bit more aggressive, whereas Euro GBP is a lot more filtered. So it'll have less trades because it's looking for more precise, more specific movements. So we also have diversification in terms of being conservative and aggressive across these 5 pairs. Nice clean equity curve, never took a circuit breaker. Again, $250, 0.01 lots, made $501 profit with 21% drawdown. So a lot more filtered, a lot more low risk on this one. That was 200% gain with only 21% max drawdown. Again, 75% win rate. US dollar Swiss, similar to Euro GBP, never took a circuit breaker, smooth, consistent equity curve, $250, 0.01 lots, made $533 profit with 36% drawdown. So that's 214% gain with 35% drawdown when using 0.01, $250. Last but not least, Eudoxus. Now Eudoxus, again, very quirky name, but I just like it because it's got EU and US, so it's kind of like Euro USD. If you Google the name Eudoxus, you'll learn a little bit of history about maths and stuff like that. Really smooth equity curve, really aggressive system, this one. This one is on the 15-minute time frame, whereas the others are all on the 1 hour. So this one's on the 15-minute, uses a lot more volume, and it's a little bit more high risk. This is the highest risk out of the bundle. This one needed $1,000 per 0.01, but doing so generated about $2,500 profit with a 44% max drawdown. So that was about 250% gain, 44% drawdown, 75% win rate. Eudoxus at the moment doesn't have a max layer of grids. This one is allowed to grid until forever, basically, but because it's a fifth of the portfolio, you can treat that as a 20% hard stop on this, whereas the rest of them have 6% hard stops on the account. So the risk management is there, the logic is there, the diversification in there. It's multi-asset because all of them are trading different currencies that are kind of hedged together with one another. The reason that we've picked all of these currencies, just to break that down, Euro, Swiss, two economically tied countries, two geographically tied countries. So it targets range-bound pairs and trades them when they're overextended or basically overbought, oversold. It's not just as simple as that. Obviously, there's a lot more that goes into it, but it looks for where the market is away or below and trades it back to the center with an averaging approach if it's wrong to pull it back. Similarly, Aussie CAD, both heavily tied to gold exports, so they're nice and range bound. Euro GBP, very similar to Euro Swiss, two economically tied currencies, two geographically tied currencies as well. US dollar Swiss, two safe havens, never really go too extreme with one another, making for nice predictable trades. And then Euro USD, this one's a bit of like a wild card to add a lot more volume in there and a lot more trades and a lot more profits. But you can see here the logic behind it. It's successful. So that's the 6.5 years of backtest data that we have on this. Now let me show you the live returns of while we've been running it live in the markets. So you can see all of this data here. Click the links on my profile or message me if you want access to this. But let's kick it off. So you can just simply Google MonedaFX My FX book, and you'll get details about our My FX book. So rather than asking me for the link, you can see our My FX book. It will come up here. We get a Google AI overview because we've got good SEO. We've been around for a long time. So if you want access, you can just simply Google it. But here's some information about our company, and then here's all of our track records. So this now is the Strike and Rescue portfolio My FX book. And what I mean by that is it's an account with all 5 of the systems running on there with the 20% allocation. Let's take a look at the growth so far. So we've been running this on since the 17th of June. The date today is the 1st of August. So we've had a full complete month of July, and we had about half the month of June. And you can see the smooth, consistent equity curve there. The account is currently 3.8% up, and we're trading this with very low risk. This is like a set and forget approach where we're using a really low risk approach, a lot lower risk than what I just showed you in the back test, because this is a recommended risk setting, which you could just kind of set and forget, not have to worry about any large drawdown periods like I mentioned. So far, we've placed 153 trades with a 75% win rate bang on. The half month of June made 1.8%, and the full month of July made about 2%. Now, important to mention with this is we recommend using a broker called IC Markets, which is a non-affiliate broker. We don't get a CPA commission for signing you up. The spreads aren't marked up at all, and we recommend using raw spread accounts. So you can get a spread on Euro USD as low as 0. Literally 0 tick spread, and this is what's going to get you the best results with this system. Now this broker, they do offer a 100% deposit bonus. Let me find it. They should have it displayed. Yeah, here you go. So this broker does offer a 100% deposit bonus, and why that is very important when using this system is it means you can double the returns here. If you were to put $10,000 into this strategy, you would have $20,000 to trade with. So when you make 50% returns, as per the returns showed on the MyFX book and the results and stuff like that, half of that is not your money. So this is actually 3.6%, and this is actually 4%. So that's really important, and it's a way that you can kind of leverage capital that's not yours in order to double your returns with this system. So we can treat this as making 3.6% in a half month and 4% the next month using that. Next, what I'm going to show you, so this was the overall portfolio with all the systems running on it. Then we also have my FX books, which have the actual sole account with only one system running on it, so you can see the individual performance of each of these systems. So you can see here we've got Eugene, which is our Euro GBP system. This one started, we'll call that 31st of May, but it's realistically, the 1st of June. So it's had all of June and now all of July, and it's 3.2% up, or with the broker deposit, 6.4%. This one has a 70% win rate. It's only taken 10 trades. Like I said, Euro GBP is a lot more highly filtered, so the volume is going to be less. But you can see here, it's got a nice clean equity curve, and it's won 100% of the months that we've traded it so far. Uncle is very similar. This is our US dollar Swiss account, a lot more highly filtered, similar to Euro GBP. So this one's taken quite a low amount of trades so far, not as many as I would have liked, but quality over quantity. Right, we're loaded up here. Now, this is full transparency from me. So far, US dollar Swiss is 0.9% down. It's not a significant amount. This is where transparency comes into play, because I'll show you the actual accounts afterwards of all of these systems. And this trade actually closed as a win. But because it held for a little bit, the swap fees made it a minus 0.9%. I see plenty of these traders out on social media that are claiming that their strategy makes this and makes that, and they've got this track record. And then you ask to see the track record, and it's a bloody Google Sheets where they're just saying they did this and they did that, and here's their wins and here's their losses. They're not taking into account any real world trading elements, such as spreads, such as swap fees, such as commissions, which took a winning set of trades here and posted it as a loss on the account. And I will show you that. I will show you everything in terms of verified IC markets. Here you can see IC markets as the broker, my FX book track records. I'm not going to list you out a bunch of trades on Google Sheets, which is not verified by anyone, doesn't take into account any real world trading conditions, and you can verify this with a third party. So this system in the portfolio, I'll show you on the live account after, it made minus 0.9% in that basket of trades. That's the only set of trades that it's done so far. It was a basket of 8 trades, half of them won, half of them lost. The actual set of trades made profit on the account, but then the swap fees brought it to a loss of just 0.9%. So it's not a crazy loss, it's not a heavy loss, but this is why we have 5 systems running at once so that it's all diversified together. So that's US dollar Swiss, and I'll show you that on the actual account afterwards. Echo, 2.6% profit, 5.2% with the broker deposit bonus, nice smooth equity curve, 15 trades so far, 73% win rate. We're holding about 8 open trades at the moment. We're just waiting on a drop on Euro Swiss, and then that should close out in profit. In June, we made 2.44%, and then in July, we only made 0.16% because we've basically been holding open trades all month. This one is a little bit slower at the moment, but as you can see from the previous results, it knows when to pick up the pace when the market is moving the way we want it to. 73% win rate there. Next up is Abracadabra. This one has been the best performer so far on Aussie dollar CAD. We've been running it for a month and a half, and it's made 6.8%. With the broker deposit bonus, that's 13.6%. As you can see, we've got a really nice smooth equity curve here. 49 trades taken so far, 78% win rate, 2 winning months, total of 6.8% or 13.6% with the broker deposit bonus. Last but not least, we've got Eudoxus, which is our Euro USD system. This one was the last to add into the portfolio. So this one has been running live since June 18th. And so far it's done about 3.8%. With the broker bonus, that's 7.6%. This has had a really smooth equity curve, and we've not had any problems with this yet whatsoever. Total of 98 trades. So like I said, it's a lot more high volume, 98 trades in a month and a half, bringing in an 80% win rate. Now, what I'm going to do is I've got two more things to show you. Next, I'm going to show you the free to access accounts, which we have. So these ones are all running low risk, which I've just showed you before. And then we've got a view of if you were to run them with a bit higher risk. Not pushing it too crazy higher risk, but a bit more higher risk to a level that retail traders are typically a bit more happy with. You know, they want faster trades, bigger size trades so that they can make bigger wins and then aim to kind of double their account, flip it and pull the money out. With the broker deposit bonuses, you only need to make 50% to double your money and pull it out because half of that money is not even yours. So when the strategy makes 50%, you've doubled your account and you can pull it out. Let me refresh the page here and open it up. I'll close all of these down to speed that up. So here we've got the free to access systems. These strategies here are free to use with an affiliate broker sign up. Now this one, Eudoxus, was set up at the start of July. We actually missed a few days at the start. I set it up on the 4th of July. And this one has done 3.9% returns. With the broker deposit as well, that's almost 8% in a month using this. You can see here we've done 47 trades in the month with a 77% win rate. Next up, we've got the Abracadabra free access account. This one's trading Aussie CAD, and this one has absolutely smashed it. This one was set up on the 8th of June, and it's done about 13% gain. With the broker deposit, 26% profit so far. And you can see here, pretty smooth equity curve, not taking any losses, just constantly banking those small profits that add up over time. This one has made 53 trades with a win rate of 70%. First month, we did 4.7 profit, which is 9.4% with the broker bonus. Second month, we did 7.8%, which is 15.6% gain with the broker deposit bonus. So you can see here those results stacking up. And then again, last but not least, we have Echo on the free to access version. Now, since I set this up on the 8th of June, we've pretty much been holding open trades all July. We've just been stacking open positions in a swing move, so we haven't really had anything close out in July. We've got 8 open trades at the moment, which we're looking for a drop on Euro Swiss to close them out. So this has been the worst performer out of the bunch. Still managed to make 1.2% profit in 20 trades, but we've only got a win rate of 45%. So this is why it's important to kind of hedge your strategies. I mentioned this, and I'm the only guy that I see on social media really banging on about having multiple strategies. You can't be a one-trick pony and just have one system running. That is not how professionals trade. That's not how hedge funds are trading. You want to have this basket of systems set up where you've got multiple strategies all trading at the same time. So when you have periods like this that are slow or consolidating or even losing, the other ones pick up the pace. Here, we've not even lost for the month. We're just holding a swing move for the whole month and building it up. We've not lost any money this month with it. But if that was the only strategy that you had, you wouldn't be a professional trader. You wouldn't have made any money this month if that's all that you had. Well, you would have, but it would have been like 1%. So that's why we have this basket of strategies. That's why we have 5 automated trading systems trading together in unison all at the same time. Now, without further ado, like I said, I'm going to show you the actual MT5 source accounts that all of these trades came from so that you can see how it looks on the graph and how it looks on the MT5 accounts. So here we've got the full strike and rescue portfolio operating on one single account. So we've got Aussie dollar CAD, we've got US dollar Swiss, we've got Euro GBP, and we've got Euro Swiss with open positions, and then we've got Euro US dollar, the high volume system. So you can see here the trade log. If I scroll up, this is the entire history since we started. It's got a super high win rate overall, way more blues than reds. It's about 75% win rate overall. And you can see here just constant TPs being hit. Now, the way that grid strategies run, if you're not familiar with them, see if I can drag this chart. I may have to undock it. No, that's good. So I'll give you an insight to how these trade. This is a really exaggerated version of it, but this is kind of how it can get. So first of all, it will place a sole trade with a TP and an SL. So the SL would have been here, and the TP would have been somewhere up here. If that TP hits, brilliant. It'll take the trade at the TP with just one position. If the TP is not hit and price comes down to where the SL would be, then it will place another position and the TP will lower. And where it will lower to is a level which considers all of the open exposure and makes sure that it's in profit above that average level. So when it's two positions like this, both of them will still close at a TP level where both the trades are in profit. But what happens if it keeps going and keeps going? Well, you can see here, this is a 15-minute system, so this one's way more aggressive. This is the most aggressive one in the portfolio, but it will go up, and it will keep averaging into the position. It's important to do this with a very low risk level on the account so that it can have the proper breathing room. And it's also important, in my opinion, to not have this as the only system on the account. So like I've said time and time again, at the moment, we've got 5 of these systems running on the account. 4 of them have 6% hard stops, and this one has a 20% hard stop. Those aren't going to be hit at the same time because they're all non-correlated diversified currencies trading together. So this is where the risk management element comes in. But what you see happen is then when this TP level's hit, as a basket, that whole set of positions will close for overall profit. Some of them will be huge wins. Some of them will be losses. But overall, all of that closes in profit. And that's kind of why the win rate is not 100%. It feels like the win rate is 100% with these systems because it will only ever really close as an overall profit on that trade. But some of them will close as losses and some of them will close as wins at the same time, which generates that profit. So that's why it's not 100% win rate, it's 75 because of how they close, okay? But there's an insight into how it trades. This is the most aggressive one. If I show you Euro GBP, which is a real non-aggressive system, I'll try find the trades for you on here. Well, I won't try, I will. Let's scroll back. You can see here, Euro GBP, price fell. Our system picked up that this was a buy opportunity, placed the buy here. TP was probably somewhere up there, SL here. That level got hit. Did we close it out and lose on the account? No. We then increased into it and price came back and took a TP. Notice the extent of this drop on the 1 hour before we started this mechanism. And that's really important. This isn't like an always on grid system that's constantly just placing positions. It will wait for price to be super low and then start this approach. Or it'll wait for price to be super high and then start this approach. And like I mentioned about the specific pairs that we're trading, they're typically range bound. They won't go on mad crazy moves without a pullback. So we're picking these specific pairs and we're trading them at these specific levels with this specific approach. And here's the specific results that we get. So it's a really smart way that we're trading here. So this is the account with all of them trading on at the same time. If I now show you the individual accounts, you can see here, we've got Euro GBP. This one started off with $1,000. It's made £40 profit, but spreads, commissions, swap fees, stuff like that, real profit generated is only £31 on that system. But you can see here all the trades have been placed, only one loss so far. What I really wanted to show you, as mentioned, is this US dollar Swiss position. Here we had a basket of trades. Let me actually find it on the chart for you now. Okay, so here it is. You can see here we went short on the US dollar Swiss on the 1 hour time frame. Price was already massively overextended and we placed our first short position. And then we stacked up shorts as price rose and rose and rose, aiming for price to pull back and close out all of those positions for a net profit. That was successful. Price did eventually come down, close at our TP, and we made £23.76 from that basket of positions. Now, if I was to overinflate my results like some of these traders do, I'd show you my results on some Google Sheets spreadsheet and I'll say, yeah, I made £23 on this trade. I didn't. I lost £9.10p from this because of the swap fees that were applied. This was a very long holding position, and during that time, it accrued negative swap fees. Swap fees can sometimes be positive, and you can actually get paid swap fees for holding for so long. It depends on the currency that your account is, and then the currencies that you're trading, and how the exchange rate between your balance and those pairs change. That's what swap fees is. So sometimes that can be positive. In this instance, it was negative, and that took a £24 profit into a £9 loss. One of our core values here at MonedaFX is transparency. So I'll show you this on a MyFX book like I did, and I'll show you that this was actually held as a loss. Fully transparent, okay? It wasn't that the move was bad and we took a loss. We actually won that trade, but the results that I'm showing you on the MyFX book and the results that we're quoting are considerate of spreads, swap fees, and commissions, which is way more than other trading groups will ever do. They'll really manipulate their results. They'll overinflate them. So if the results that I'm showing you here sound like they're quite small, it's realistic, and it's what's actually finally achieved on the account. No bullshit. Next up here, we've got Euro Swiss. This started off really well, but now we're holding like 8 open positions and building another swing trading position, which is going to happen with the Swiss franc because it's quite a slower moving pair. This one, like I said, started off really well. We've hardly had any losses. It's pretty much just been wins. Total profit was £36.61. After fees, it was £26. So this one's still up, but it's just a bit more slower moving at the moment. Next up, we've got Aussie dollar CAD. This one has been my favorite so far. We started off with $1,000 and we're up 7%. With a 100% deposit bonus, that brings that up to about 14%. This one, if I expand this for you here, now you can see all history. This one has hardly took any losses. That is a true sea of blues right there. Constant TPs being hit. The fees have been minimal on this as well. It's £76 banked on the account, paid about £8 in swap fees and commissions and stuff like that. If I lower this down, here's an insight into how it's trading on the chart. So a couple of positions there, TP. Basket of positions there, TP. Basket of positions there, TP. Here you can see an example of when price dropped, it placed a buy. This one didn't hit our stop loss level to start averaging in. It held through that drawdown with one position and hit the TP. So that is a display of the strike element of the system. It won't just mindlessly grid. If we do have an entry, it will have a single position element which will take a TP there. But you can see most of the time it's really low risk, considering that we might have to average into these positions to a certain controlled extent, so it allows plenty of room to breathe. Here you can see a good few back-to-back trades. This one, single position, entry, TP. Straight after that, single position, entry, TP. Price ran up, became overextended, single position, entry, TP. And then now, last but not least, we have the Euro US dollar. This one, like I mentioned, is on the 15-minute time frame, so it's a lot more aggressive. But this one is kind of fan favorite among the retail clients because it feels like it's trading every single day, bringing in a lot of the volume and a really high 80% win rate on this as well. So I'll scroll through the trades here so you can see them all. Pretty much a sea of blues there, hardly any losses. The wins are small, but they add up because there's a lot of them over time. And that is kind of the best way to trade on prop firms, and it's the best way to trade with algos because you're just banking small, consistent wins that really add up over the time. You're not trying to hit any huge, large moves. You're trying to just scout the market in small and controlled, precise positions where you have the highest percentage chance of winning. So you can see here, this was quite a huge basket of trades that closed for a big win. Apart from that, what you'll notice is that it's waiting for price to be at the highs before it shorts, and it's waiting for price to be at the lows before it buys. And that's what makes this super high accuracy. So you can see we weren't placing short positions here. Our strategy knows that this is the top of the cliff, and that's where it's going to place the shorts. And then this is the bottom of the trough, and that's where it's placing the longs. And then the risk management element is this. This you could have normally seen as the top of the cliff where price would have immediately came back down, but this was actually during FOMC. So we had some fundamentals here driving price higher, and that's why we allow the breathing room on this system, because it averaged in to that price increase to a controlled level that knows that people that are going long in this move, eventually they're going to cash in their positions from trading. And when they close their longs, it places short orders and drives the market down. So everything that comes up must go down. Everything that goes down must come up in these range-bound specific pairs that we're trading. But you have to know how high can they go and how low can they go. So that's why it's important that we've got 6.5 years of data on this. So there you can see a prime example of a move that would have been crazy and wiped out some martingale strategies and high lot size, even low lot size multipliers. They're unstable. So here you can see a perfect example of our risk management there. Now, if you want to try out these systems for yourself, simply all you have to do is come to our website, MonedaFX.com. Here you can see our homepage, you can see all of our partnerships and stuff like this. You can browse all of the products that we have. So we have autopilot trading available on prop firms, which we focus on with FTMO. We have the MFX Academy, which includes manual trading, trading view indicators, and our free automated trading systems, as well as an affiliate marketing ecosystem. And then we have autopilot trading, which I've just discussed with you here. Now, we have two models. One of them is a free plan and one of them is a premium plan. If you just want something for free, like most people do in the retail market, we have the free plan. If you want something that's going to give you the best results so you can achieve your desired approach in the fastest possible way, that's what the premium plan is for. So if you want more information about this, just click Start Now on autopilot trading. It will pop up a short form, takes 1 minute to fill out, and then you can book a one-to-one consultation call with us. If you're interested in the free plan and seeing what's available in that, you can click on the Learn More button here on MFX Academy. Once you're on the inside, you can see exactly what it is that we offer at MonedaFX. Here's everything that we have available in the free plan. You can hear from our members here, and you can see some results from our members here. So likewise, just click Apply Now. It's a 1 minute application form to fill out. A member of our team will get in touch with you, and then we can see what's the best fit for you to align with you, your goals, your budget, and where you want to be in trading. So this is the first video of many showing off the strike and rescue systems. What I'm going to aim to do is at the end of each week, I'm going to give you a recap of how each of these systems has performed and how they've performed as an overall portfolio on the accounts. I'll show you the MyFX book and I'll show you the actual MT5 accounts where the trades were executed on. If you don't want to miss these updates, click the subscribe button below and turn on the notification bell, and you'll get a notification every single time I post a new video so you can keep track of how we're doing. Hope this video has been useful and insightful, and I'll see you next time.